Now, when it comes to picking trash, we don't discriminate. Anybody can get it. When it comes to picking the right life insurance policy, you gotta be a little more thoughtful. You see, the three main types of life insurance all have their unique benefits and drawbacks. Now, first, you got your traditional whole life plan. This is the type of plan your grandmama would have bought you back in the day. Think Gerber Life Grow Up Plan. The whole life, as the name implies, is coverage that's going to last your entire life. It's permanent coverage, so as long as you pay the premium, you have it, and because it accrues cash value as you pay into it, you can actually even miss a couple payments and it'll pay for itself. Except these plans are not quite the quote-unquote investment that many would have you believe. They don't really make much sense to purchase on children. You don't actually accrue much cash value on a plan you pay $5 a month for. Now, there is a version of these plans that are great for the elderly called final expense plans. These are plans that have limited medical underwriting designed specifically for those over the age of 50. In return for that limited underwriting, you get a limited death benefit, usually don't go over $50,000 in coverage. But in terms of what these are used for, just to pay for funeral expenses and final expenses, that's usually more than enough. Then you've got the very popular term policies. Term life insurance is temporary coverage, usually set for a given number of years. I've seen them for as little as 10 years up to a maximum of 30 or 40 years. But regardless, when you hit that term expiry date, the coverage will cease. And because it's temporary coverage, it comes at a fraction of the cost of permanent policies. We're talking for the same death benefit, a term plan can be less than a quarter of the price of a whole life plan, which means you can get a lot more coverage for the money, but because it's temporary, it does not accrue any cash. So if nobody ever gets paid a death benefit, it does kind of end up being a waste of money, which is actually a good thing because it means you didn't die. About 8 out of 10 term life insurance policies actually never pay out a death benefit. And then you've got the fancy and probably most discussed policy, the universal life. These are effectively a combination of both term and permanent. These plans essentially charge you a premium like you were getting a term policy every year. So you pay term prices that renew once a year at higher rates. As long as you meet that charge, you will have this policy forever as well. However, most people take these policies out not to meet that charge, but to overfund it. And this is so because that extra cash that you build up can be credited to interest based off how the stock market performs. And over time, this can really accrue to some significant value. These are types of policies you hear about people self-banking or infinite banking. Because that money's attached to a life insurance policy, it can be pulled out tax-free. But it's important not to get caught up here and trying to do the most at first. Everybody would love to fund a plan that they can pull out hundreds of thousands of dollars tax-free. But not everybody can afford such a plan, and they still need life insurance coverage. And so at the end of the day, the number one factor to consider here is your budget. What is your budget going to allow you to do to achieve the coverage you, your family, and your business needs? And luckily, that's kind of what we're here for.